In this video, I'm going to share 5 cryptos that I'm buying for 2025, as well as my thesis for each of them. These include an AI token, a DeFi token, a layer 1 token, a real world asset token, and then a decentralized physical infrastructure network token. Now let's get into it. The first crypto that I'm investing in for 2025 is an AI token known as AI16Z. AI16Z started out as an AI-led hedge fund that would invest a DAO treasury based on AI. However, it's since turned into much more. It's an open source software kit for building on-chain agents, as well as much more. So let's dive in a little bit. This is their Twitter, and this is where many people first encountered AI16Z on this launchpad known as DAOs.fun. And the point of this is basically for launching on-chain agent DAOs. And when this launched, its market cap very quickly shot up to tens of millions of dollars, and it currently sits at around $800 million. And the original concept was that they had a DAO treasury, and then people who owned a certain number of tokens would be able to submit ideas to this model, and then it would invest based on them. However, it's since turned into much more. It's turned into what's known as ELIZA OS, which is building a operating system for AI agents, and it's gotten quite a bit of traction. Just a few days ago, they partnered with Stanford University to explore AI agents and their impact on digital currency systems. IODEX has built the first ever AI agent for DePIN using the AI16Z DAO ELIZA framework. Story Protocol, a new blockchain for IP, is integrating AI16Z DAO's ELIZA. And then if you go to GitHub and look at trending repositories, the AI16Z ELIZA repository is currently the top trending repository of the past month across all of GitHub, not just crypto. And then in the words of Shaw, who is working on ELIZA OS, ELIZA Labs is the name we're using for our physical footprint in the world. The token is AI16Z/DGen AI. These are permissionless assets. Nobody can change them. No change in structure, just making everything more real so we can do cool stuff like academic partnerships, like this Stanford partnership that we mentioned a moment ago. And then you also have the fact that because AI16Z sits at the center of an ecosystem, it's going to benefit from things like network effects and Metcalfe's law, where the more on-chain agents that actually are created using its framework and enter that ecosystem, the more valuable the entire ecosystem becomes. And to wrap things up with this one, I also like that all of the tokens are already in circulation. So you don't have to worry about being diluted later on. The tokens are all already out there. The second crypto that I'm buying for 2025 is both a layer 1 and a DeFi protocol, and that is Hyperliquid. Hyperliquid is currently the leading perp dex in all of crypto, and pretty soon it's also going to be a layer 1 for other applications to be built on as well. And here's why I think that Hyperliquid is one of the most interesting projects in crypto at the moment. Historically, perpetuals have been one of the best business models in crypto. One of the ways that a lot of the flagship companies of crypto have made their money. You had BitMEX at one point, you have Binance. And then there's been a lot of talk for years of, will anyone be able to successfully replicate that model on chain? Because all of those were centralized exchanges. Well, Hyperliquid has done the best job to date of anyone trying to do that. I'll say that firsthand, the experience feels very much similar to a centralized exchange. However, it is on chain, so you connect through your wallet. And then on top of that, they've actually managed to accrue pretty significant volume. They're getting over $10 billion in volume in recent days, and there's nearly $3 billion in deposits on the exchange. So it's still a small fish compared to a lot of major exchanges that might have high tens of billions of dollars of deposits and higher volume than this. However, I would say that it's starting to find some serious product market fit. And what's also significant is that this volume has not dropped following their airdrop. In fact, it's actually gone up following their airdrop. And for a long time, one of the fears with Hyperliquid was once they airdrop a token, how much of this trading is wash trading from people who are just hoping to get an airdrop. Well, the airdrop already happened and volume has only gone up. And what I think makes Hyperliquid so interesting is basically they've used this platform of building a perp DEX that's getting significant usage as a springboard to now launch their own chain. It's already on its own chain, but now it's going to be a general purpose chain that has high throughput, low fees, all the things that are necessary to get people to use a chain in 2025. And this is how they're characterizing the stack. I'll show you guys here. So they've got the perp and spot order books. That's the flagship application. Soon they'll have user built applications and native components that will be able to interact seamlessly. So you'll be able to launch tokens and have user built apps and then seamlessly switch to trading on Hyperliquid, or vice versa. You'll be able to take money that you earn trading on Hyperliquid or are using on Hyperliquid and then use it on some of these user built apps. And then they'll also have high performance applications that are built natively, so that are built into the Hyperliquid protocol, and that involves this Hyper EVM chain that's launching soon. And then finally, some things here on their consensus, which is known as Hyper BFT. And some stats on what they're doing right now. They have 300,000 users, block times of 0.2 seconds with 200,000 transactions per second. And then I think what's also really interesting, you'll see a pattern with a lot of the ones I've picked today, is they have no investors, no paid market makers, and they don't pay fees to external companies. So very community-driven project. They airdropped a huge portion of their supply. And again, they did not take early investors, so you don't have to worry about VCs that are going to dump on you when they get unlocks, because there are none to get unlocks. And while there are many things I like about Hyperliquid, there are a few risks you should be aware of before going any further. Their airdrop was, in my opinion, very well done and had a good distribution. However, it's very far from decentralized right now. The chain is still controlled by a small group of nodes. There's no way for you as a user to spin up a validator. And they don't have the Hyper BFT proof of stake consensus launched yet. Now, having the token is in many ways a prerequisite to launching that consensus. So it's expected that it would take some time. However, if you're investing, just be aware that you're still investing in a project that, while you're accessing it on chain, it is highly centralized compared to a typical DeFi application. I happen to think that is a necessary step to actually build out this perp DEX. Perp DEXs that tried to start out decentralized typically had a tough time doing so. But you should be aware of that risk. Another risk to be aware of: good news and bad news. The good news is, turns out a lot of people agree with me about Hyperliquid being a good bet for 2025. The bad news: I started making this video several days ago because it takes time to research and everything. And in that time, Hyperliquid has gone up considerably in price. If you go back a month, it's actually gone up even more. And so I'll leave it up to the viewer to decide what sort of dip one would wait for before buying into Hyperliquid. However, I will say, I think the way to consider its high valuation and why I'm still interested in it despite the high valuation is that it's both a layer 1 and a perp DEX, that is probably giving the best effort towards competing with centralized exchanges as any perp DEX has ever done. By the way, if you want to catch things like Hyperliquid early, I have a newsletter where I talk about things that are trending on chain weeks or even months before I talk about them on the channel. Here was me calling out Hyperliquid's TVL and derivatives volume remaining strong post airdrop in my premium newsletter. And this was all the way back on December 2nd. And for the sake of comparison, if you go back and look at the price then, you could have been in Hyperliquid between $7 and $8. The third crypto that I'm buying as we go into 2025 is a DeFi protocol known as Airdrome. Airdrome is the leading decentralized exchange on Base, Coinbase's Ethereum layer 2, and it has, without a doubt, some of the most bullish on-chain metrics of any DeFi project as we close out the year. Let's take a look. This is Airdrome's website. They brand themselves as the central trading and liquidity marketplace on Base. And you may be familiar with the Base ecosystem. Again, it's Coinbase's layer 2. I think a lot of the activity that's happening on Base can in some ways be tied back to or takes place within Aerodrome. And that's because Aerodrome is the top place to actually swap tokens on Base. And if you look at this on-chain stats for Aerodrome, they are nothing short of incredible. December so far, it has had over $18 billion of volume, on track to surpass November, which was previously the highest month ever, which would mean 3 consecutive months for all-time high volume. Arguably, volume is the most or second most important metric for exchanges. And then if you look at the total value locked, you can see that it's over $1.5 billion now. And just to reverse a little, see where it was at the start of the year, the total value locked, aka deposits, was just over $100 million, and volume was around 148 million. So volume 148 million to over $18 billion in the last month, 21 billion. Do the math. That is over a 100x in less than a year. TVL up not 100x, but up more than 10x. And so basically this thing has just been growing consistently throughout the year. So the magnitude of the growth is important, but what's also important is that it wasn't just a spike, right? If it's a spike all at once, oftentimes that can be a sign that it's going to go down just as quickly. But Aerodrome has just steadily ramped up. They've developed that flywheel. And what's also important is that not only is there a lot of volume, not only are there deposits, but they're actually collecting a lot of fees. And people always forget about that, right? Crypto protocols, DeFi projects, they are in many ways businesses. They need to be making money if they're going to survive. And Aerodrome, if you look at this, they are collecting significant fees. Just last week, nearly $5 million in fees collected. And because of the way those tokenomics are set up, all of those fees get passed on to token holders. They're recognized as revenue. And so those Aerodrome revenues get passed on to token holders, which drives the value of the token. That token then gets used to incentivize people to provide liquidity on Aerodrome, which increases the liquidity. And then that liquidity allows more trading to move to Aerodrome. And you're actually seeing now Aerodrome is surpassing Uniswap on Ethereum mainnet for certain pairs. You can see they're doing significant volume. They have huge liquidity for things like USDC, for CBBTC, that's Coinbase's version of wrapped Bitcoin. Virtual is one of the hottest AI agent ecosystems right now. It's on Base, and their token, you can trade it on Aerodrome. Huge volumes with wrapped ETH. So basically Aerodrome is sitting at the center of the economy for Coinbase's ecosystem. And I think that as Coinbase pushes more people on-chain to use their on-chain ecosystem, Aerodrome is in many ways going to be a beneficiary of that, because it kind of acts like a proxy Base token right now, since it's the leading application on Base and since it accrues a lot of the economic value from people trading on Base. As far as the current valuation of it, its market cap is around $1.16 billion with a fully diluted valuation of around $2.3 billion. And although nearly 50% of the tokens still need to come into circulation, I would say that this ratio of around 50% being in circulation now is not unreasonable for a relatively new DeFi protocol, especially one with high growth potential as we continue into a crypto bull market. The fourth crypto that I'm buying as we enter 2025 is a protocol that has one of the fastest real-world asset-backed stablecoins, and that is Usual. What exactly is Usual? Let's dive in, because it's a relatively new project, so I think a lot of you may not have heard of it yet. Basically, one way to think about it is they are trying to build Tether or Circle, the creators of USDT and USDC, but on-chain. Tether and Circle are some of the most profitable businesses in all of crypto. In the first half of this year, Tether profited $5.2 billion, and that's great for them. In many ways, they provide a great service because people around the world can use USDT for payments in US dollars. However, for those of us who are investing in crypto, we haven't really been able to benefit from that like you would hope to if a crypto app had breakout success, because there's no token. What Usual Money is doing is actually trying to rebuild those, but with decentralized on-chain governance, and additionally passing on that yield, those profits, to the on-chain economy. So I think it's a really ambitious vision, and I think honestly, I think it's a vision that holds a lot of potential. And a lot of people agree because the protocol is growing rapidly. If you look at the total circulating USD0, the usual USD stablecoin, then you can see it's grown from just being launched in June to now $1.2 billion. And even if you go back to the start of December, the supply was around $500 million, meaning that it's more than doubled in the past 3 weeks, adding $700 billion of market cap to their stablecoin. They just launched their usual governance token a few days ago, and it's been trending up then, but its market cap is still reasonable at around $661 million. Now, one thing you may know is that its market cap and fully diluted valuation are extremely close right now. While that's good because it means there's not a ton of locked supply overhanging, understand that there is still inflation. If you go to the usual white paper, then you can see that they have an inflation rate where new usual is minted to incentivize deposits. However, it's designed to be disinflationary because the amount of usual distributed per unit of locked TVL decreases in proportion to the protocol's growth in TVL. Basically, that means that the distribution of usual, it's not determined by the TVL, it's determined by other things. And they have this complex formula to do it, which incorporates how long the protocol has been active because the daily distribution will decrease over time, but it also incorporates things such as the interest rate. And what I really like about usual, and the reason why I'm including it on this list, is first off, the incredible growth of their core product. Seeing the stablecoin increase by more than 2x in just a few weeks, to me, is an alarm bell that it's worth paying attention to. And then you have the sheer scope of their total addressable market and how big this could get. I mean, on one hand, you could say this could get as big as Tether and Circle, but then you consider that many are predicting that the total stablecoin market cap will reach trillions in the future. And so in that case, Usual's eventual market could be even larger than Tether and Circle are today. My fifth and final crypto is a DePIN, aka Decentralized Physical Infrastructure Network. And before I get into it, I want to make a quick note because I can already see the comments. Some people are going to say, oh, what about this other token I like? You forgot to mention it. First off, there's lots of tokens I like that I'm not mentioning, right? And maybe yours is one of them. For these sorts of videos, you have to be relatively concise because if I listed 20 tokens I like, it wouldn't be very valuable to any of you. All right, so let's get into it now. What's the DePIN token I chose for this video? I chose Helium, and I'll show you why. Helium is a decentralized mobile carrier. You can see the map here of all their hotspots around the world. Now, it's very concentrated in North America, Europe, and East Asia right now, although they do have a significant presence in a few other pockets elsewhere. But basically, what makes Helium interesting to me is that you actually have people using it. You can buy a Helium mobile plan that lets you connect to any of these 375,000 hotspots. And basically what Helium is doing is applying the token incentivization model pioneered by Bitcoin to actually bootstrap this network. And they've done it very effectively because there's hundreds of thousands of them now. And I've been talking about the mobile network. A lot of these hotspots are also used for things like IoT devices that need hotspots to connect to. But what's really gotten a lot of traction recently has actually been their mobile service. If you look, for example, at the total number of signups, they have 124,000 signups now, 28,000 hotspots for their mobile carrier. And if you look at the actual network usage, it's even stronger. This is the hotspot data going up parabolically. And then if you look at the carrier offload, so from other carriers, you can see that the daily subscribers has increased rapidly from the low tens of thousands over the summer to 326,000 daily subscribers now. And if you look at the offload data here, you can see that this has been growing rapidly. As far as tokenomics, Helium has fairly unique tokens because they actually have a multi-token model. I'm going to reference a post I made in my newsletter a few months ago about Helium here, but they have their HNT token, which is the primary token. It's the protocol token, and this is the one that I'm referring to when I talk about buying Helium. But they also have data credits, which is a USD pegged utility token. They have IoT, which is the protocol token for the Helium IoT network. And then they have the mobile token, which is the protocol token for the Helium mobile network. And mobile tokens derive their value from carrier network offload and consumer mobile usage. But the reason that I chose HNT is, first off, that it has deflationary economics, where in order to get DC to pay to use the network, you need to burn Helium, decreasing the supply. And also because Helium is the best bet, in my view, on the network as a whole, rather than betting on the specific IoT or specific mobile network. Additionally, Helium already has a majority of HNT in circulation, so you don't have to worry about significant dilution in the future. If you want YouTube to show you more videos like this, be sure to like and subscribe. And until next time, this is Dynamo DeFi.